Welcome to Agoracom Small Cap Breaking News, your daily go-to source for the best small cap headlines for over 65 million investors since 2007.
That's right.
Today, we're going to be diving deep into 4 companies that are making some serious moves.
You know what I really like about these is they're all over the map in terms of industries and stages of development, but each one has some pretty compelling news.
Yeah, we're talking about gold exploration, a strategic acquisition in the mining sector, a brand trying to reinvent itself in a new market even.
It really shows the diversity of opportunities that exist in the small cap space and why it's so important to keep an eye on these companies.
For our listener, the learner, we're going to be breaking down these headlines, explaining why they matter, and pointing out the key financial or operational results that could be real catalysts.
Exactly. We're not just going to read you the headlines. We're going to give you the context you need to decide if these companies are worth a deeper dive for your own portfolio.
So let's jump right in. Our first headline takes us to British Columbia and the world of gold exploration, SunSummit Minerals, trading on the TSX Venture under the ticker SMN and on the OTCQB as SMREF.
All right, let's hear it.
They just announced SunSummit's Buck project hits gold with inaugural resource estimate, a promising leap in British Columbia mining.
Okay, so right off the bat, we're seeing that classic mining headline, hits gold, always grabs attention. But what does it actually mean in terms of real resources in the ground?
Well, this is their first independent mineral resource estimate for the Buck main deposit, and it reveals over 820,000 ounces of inferred gold equivalent. That's AUEQ for short.
Now, it's important to remember that inferred resources are an early-stage estimate based on limited drilling data, so there's still a level of uncertainty. But it's a significant first step and suggests the potential for a substantial deposit.
Absolutely. And within that inferred category, they've identified 775,500 ounces of gold and pretty impressive 8.4 million ounces of silver. That's a lot of precious metals.
No kidding.
Right.
They have also got nearly 20,000 ounces in the indicated category, which is based on more closely spaced drilling and therefore carries a higher level of confidence.
Right. So within that indicated category, we're looking at 18,300 ounces of gold and 158,000 ounces of silver.
So they've got a decent chunk of higher confidence resources to build on as they continue exploration.
Now, beyond the size of the resource, the grade is also pretty noteworthy. We're looking at 0.489 grams per ton. AOQ for the inferred resources, and 0.519 grams per ton, AOQ for the indicated Q.
Okay, so for our listener who may not be familiar with mining terminology, grams per ton, or GT, is basically a measure of how concentrated the gold is within the rock. The higher the grade, the more gold there is in each ton of material.
Right, and while these grades aren't exceptionally high, they do suggest a potentially viable deposit, especially when you consider their next headline-grabbing number.
Let me guess. This is where they announce a ridiculously low discovery cost.
You got it. They're reporting a discovery cost of only 18 Canadian dollars per ounce of gold equivalent discovered.
Wow, that is impressive. Especially for a project in British Columbia where exploration costs can be pretty steep.
Exactly. To put that into perspective, similar projects in the region often have discovery costs that are significantly higher. So this suggests that SunSummit is either finding gold very efficiently, or they have a really skilled exploration team.
Or maybe a bit of both, which is definitely a good sign for investors.
Absolutely. And to make things even more attractive, the resources are near surface within an optimized open-pit shell using a conservative 0.25 dran-up GE OEQ cutoff.
Okay, so open pit means they can potentially mine the gold from the surface, which is generally less expensive and faster to develop than underground mining. That lower cutoff grade also suggests that they're being realistic about what they can economically extract.
Right, so for the learner, this all adds up to a pretty compelling early-stage story. They've got a decent-sized resource with good grades, a remarkably low discovery cost, and the potential for open-pit mining.
Plus, don't forget they mentioned the deposit remains open in multiple directions. That means there's a good chance they can expand those resource numbers even further with additional drilling.
All right, so we've got gold in British Columbia. Let's shift gears and head over to Quebec, where Renforth Resources is making headlines.
Always love a good Quebec mining story. What's the ticker symbol for our listeners who want to follow along?
They trade on the CSE under the symbol RFR, on the OTC is RFHRF, and on the FSE as 9RR.
Got it. What's the news?
Their headline reads, Renforth Resources boosts gold estimate at Parbec Deposit, signaling strategic growth next to Canadian Malartic mine.
Ooh, that's interesting. They're right next to one of the biggest gold mines in Canada.
Exactly. And that proximity is not just a coincidence. It actually plays a big role in the potential of this project. But first, let's talk about the updated resource estimate.
Yeah, what kind of boost are we talking about here?
A pretty significant one. They've increased their overall gold ounces at the Parbec Gold Deposit by 29%.
Okay, that's a solid increase. But what's even more important in the mining world is the level of confidence in those resources. What's the breakdown?
Well, they've managed to move a significant chunk of their inferred resources into the measured and indicated categories.
That's a big deal because those are the higher confidence categories, meaning there's more certainty about the actual amount of gold present.
Exactly. So to break it down, 12% is now in the measured category and 61% is in the indicated category.
So that's a combined 73% in the highest confidence categories. That's a huge jump and a great sign for investors.
It definitely de-risks the project and gives a much clearer picture of what they're working with.
And what about this open pit design they mentioned in the headline? What percentage of the resource falls within that?
This is where it gets even better. 87% of the estimated ounces are now within an open pit design.
Wow, so almost all of it could potentially be mined using the less expensive open pit method. That significantly improves the economics of the project.
Exactly. And they're not stopping there. They've also identified new drill targets to try and convert the remaining inferred ounces and potentially expand the mineralization even further.
So they're actively working to increase both the size and the confidence level of their resource.
Now let's talk about that strategic location. They're literally right next door to Agnico Eagle's massive Canadian Malartic mine, which is one of the largest gold mines in Canada.
That kind of proximity offers a lot of advantages. For starters, it suggests that the geology in the area is favorable for gold mineralization.
Right. If there's a giant gold mine right next door, it's a pretty good indication that you might find some gold on your property too.
Exactly. And beyond the geology, there are also potential benefits in terms of infrastructure and expertise.
Being close to a major mine like Canadian Malartic means Renforth could potentially tap into existing infrastructure like roads, power lines, and even processing facilities.
That could save them a lot of time and money if they ever decide to develop their own mine.
And they could also benefit from the skilled workforce and the deep understanding of the regional geology that's already present in the area.
So for the learner, when you're evaluating a junior mining company, location can be a crucial factor. In Renforth's case, being next to a major operating mine provides a level of validation and could potentially lead to some very valuable synergies down the line.
All right, let's take a break from the gold rush and dive into something completely different.
Sounds good. I could use a change of pace.
Our next headline comes from Jones Soda Co., trading on the CSE under the symbol JSDA and on the OTCQB also as JSDA.
Okay, Jones Soda. I know them. They're the ones with the funky flavors and the cool labels, right?
That's them. But they're not just about craft soda anymore. They're making a big move into the functional beverage market.
Interesting. So what's the headline?
It's a big one. POP Jones rollout in 848 new retail stores.
Wow, that's a lot of new stores. What is POP Jones?
POP Jones is their new line of prebiotic sodas, and they've just secured placement in 761 Albertsons stores across 13 states and 87 Market Basket outlets in the Northeast.
So they're going big with this rollout. Albertsons is a major supermarket chain, and Market Basket is a big player in the Northeast. That's a lot of potential customers.
Exactly. And this is all about market penetration, getting their product in front of as many people as possible.
So it's not about exploration or resource expansion in this case. It's about expanding their reach in the retail market.
Right. And what's interesting is that they're not just trying to sell more of their traditional craft soda. They're targeting a completely new market segment with POP Jones.
Yeah, what's so special about this prebiotic soda?
Well, it's designed to appeal to health-conscious consumers. It's got only 30 calories per can, no artificial sweeteners, real juice, 3 grams of dietary fiber, 4 grams of sugar, and even a zinc boost.
Sounds like they're trying to tap into that growing demand for functional beverages, drinks that not only taste good, but also offer some kind of health benefit.
Exactly. And this expansion builds on their earlier success with Fiesta Jones, another new product line that they recently placed in nearly 2,000 new C-store locations.
So they're really diversifying their product portfolio and trying to break out of that craft soda niche.
Right. So for the learner, this headline is all about a company trying to evolve its brand and capitalize on emerging consumer trends.
It's a classic example of a company trying to reinvent itself to stay relevant in a changing market.
The key question now is whether they can actually pull it off. Will consumers embrace Jones Soda as a provider of healthy, functional beverages?
That's what investors will be watching closely. Will this increased retail presence translate into meaningful sales growth? Can they leverage their brand recognition to gain traction in these new segments?
All right, for our final headline, let's head back to the world of gold mining, where Wesdom Goldmines is making a big move.
Hit me with it.
Wesdom, trading on the TSX under the symbol WDO, has just announced they're going to acquire Angus Gold in strategic a $40 million deal to expand Eagle River footprint.
Okay, a $40 million acquisition. That's a significant move for a company like Wesdom. What's the strategy here?
This is all about consolidation and expansion. Wesdom's is acquiring Angus Gold to expand their footprint around their existing Eagle River mine in northern Ontario.
So they're buying up land and resources in a region where they already have a successful operation.
Exactly. And this deal is going to quadruple their exploration footprint in the area, bringing it to a massive 400 square kilometers.
Wow, that's a huge increase in land holdings. So they're really doubling down on the potential of this region.
Absolutely. And they're not just buying any land. They're acquiring Angus Gold, which has some very promising exploration results of its own.
So they're not starting from scratch. They're acquiring a company that already has a head start in terms of exploration.
Right. And Wesdom is paying a pretty hefty premium for those assets. Each Angus share will be exchanged for 62 cents in cash and 0.0096 of a Wesdom share.
So what does that work out to in terms of a premium over Angus's recent share price?
It represents a total value of 77 cents per share, which is a 59% premium to Angus's 20-day volume-weighted average share price.
That's a significant premium. It shows that Wesdom sees a lot of value in Angus Gold's assets, and they're willing to pay up to get them.
And what's driving that valuation is the potential that's locked up in Angus's land package. They have multiple mineralized trends that have shown some very impressive gold grades in recent drilling.
Give me some examples of those high grades.
Well, they've reported intercepts like 48.7 grams per ton, gold over 1.5 meters, and 47.4 meters at 1.1 grams per ton gold.
Those are some really nice grades, especially considering they're located right next to Wesdom's existing Eagle River mine.
Exactly. So not only does Wesdom get a much larger exploration footprint, but they also get access to some high-grade targets that could potentially be developed relatively quickly.
It's a smart move. They're consolidating a key mining district and acquiring a company that has already done a lot of the heavy lifting in terms of exploration.
So for the learner, this acquisition is a great example of how strategic M&A activity can create value in the mining sector. By acquiring a company with promising exploration results in close proximity to their existing operations. Wesdom is reducing their exploration risk and potentially creating some very valuable synergies.
It's a win-win for both companies. And it's a story that investors interested in the gold sector should definitely keep an eye on.
So there you have it. 4 small-cap companies, 4 very different headlines, and a whole lot of potential.
It's fascinating to see the diverse range of strategies that these companies are using to grow their businesses.
We had SunSummit with their impressive initial gold resource and that remarkably low discovery cost.
Then there was Renforth boosting their gold estimate and highlighting their strategic location right next to a major mine.
And who could forget Jones Soda with their bold move into the functional beverage market and that massive retail expansion.
And finally, Wesdom making a strategic acquisition to consolidate a key mining district and potentially unlock some serious value.
So for our listener, the learner, this is just the tip of the iceberg. We've given you the headlines and the key financial and operational highlights. Now it's up to you to decide which of these stories warrants a deeper dive.
Exactly. Do your own research, dig into their financials and technical reports, and decide for yourself if any of these companies deserve a spot in your portfolio.
And as you're doing your research, think about what kind of news and results really get you excited as an investor.
Are you drawn to early-stage exploration companies with the potential for big discoveries? Or do you prefer more established players with a proven track record?
Do you get excited about companies that are disrupting traditional industries, or are you more interested in companies that are consolidating and expanding their market share?
There's no right or wrong answer. It's all about finding the companies and the stories that align with your own investment goals and risk tolerance.
Thanks for tuning into this Agoracom Small Cap Breaking News Deep Dive. We hope you found it informative and insightful.
And remember, do your own research and always invest responsibly.
We'll see you next time.